Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, April 29th. Participants shrugged off a worse-than-expected GDP reading to hand stocks their best single-session gain in 1 week. Financial stocks led the charge and helped keep the broader market in the green for the entire session. The advanced first quarter GDP report indicated the U.S. economy fell 6.1% between January and March. A drop of 4.7% had been expected. Despite the ugly headline number, participants weren't deterred from bidding stocks higher. Some took heart that economic conditions may be turning since personal consumption climbed 2.2% after dropping 4.3% in the fourth quarter. The swing in spending was also better than expected as the consensus called for an increase of 0.9%. However, the FOMC's latest policy statement released today noted that household spending will continue to be pressured by job losses, decreased housing wealth, and tight credit conditions. The committee expects continued weak economic activity, but feels its policy actions combined with fiscal stimulus should help contribute to a gradual resumption of sustained economic growth. The FOMC kept the federal funds rate unchanged at a target range of 0% to 0.25% as expected. Its quantitative easing targets were also unchanged. Stocks showed some volatility and climbed to a gain of 3.1% following the FOMC announcement, but eventually pulled back. Meanwhile, Treasuries moved lower. The 10-year note finished down roughly 23 ticks, which lifted its yield to almost 3.1%. Still, hope for an economic recovery in the second half of this year helped prop up oil prices. Oil prices gained 2.2% to close at $51 per barrel, despite a massive build of 4.05 million barrels during the week ending April 24th. A build of 1.8 million barrels was expected. The uptick in crude prices, combined with broad-based optimism, helped lift energy stocks 2.8%. Financials, though, were the best-performing sector, up 4.8%. Their advance was led by diversified financial services stocks and diversified bank stocks. Their gains came despite news from Bloomberg.com that at least 6 of the 19 largest U.S. banks may require additional capital, reflecting participants' willingness to pick up bank stocks after watching the shares slide in each of the past 2 sessions. Leadership from financials helped take 9 of the 10 major sectors in the S&P 500 higher for the session. Telecom, which was down 0.5%, was the only sector to finish in the red. Earnings news was upbeat heading into Wednesday's trading, but participants generally look past the announcements. However, earnings will dominate headlines ahead of Thursday's opening bell, as approximately 150 companies are scheduled to announce their latest results tomorrow morning. Initial jobless claims data and personal spending data for March are also scheduled to be released before the opening bell. I'm Pat O'Hare for Briefing.com. Thanks for listening.